We are live here, and already Colin Brennan says hi or something. He's got a smiley on there. Andy Edstrom, welcome to the podcast, the Magic Internet Money Podcast, author of Why Buy Bitcoin. And you also work at Swan Bitcoin, right? You're like the chief institutional guy there or something?
Yeah, I mean, first of all, it's great to be with you, Brad. I don't want to overstate my role at Swan. Yeah, my title is head of institutional. I mostly just advise occasionally and obviously shill the brand whenever possible. But it's not like I'm working there, full time or anything like that. I'm just lucky to be one of the, group of immensely talented folks that Corey Clipson has managed and Jan Pritzker have managed to attract to the Swan flock.
Nice. Well, that's good. Yeah, there's a lot of people that are aligned to Swan Bitcoin and helping spread the message of why buy Bitcoin using Swan. It's great place to stack if you're in the USA, I suppose, is it?
Yeah,
we don't have it here. I can't use it. So it's like, I don't really know. I don't ever really recommend it because I can't use it. So I typically like to only recommend things I can use. So they got to get to Canada soon.
Yeah, that's totally fair. I mean, I'd love to see Swan take over the world. We will. I don't know what the plans are to go international. Needless to say, the U.S. market is so big that there's plenty of opportunity. But I don't know. Maybe you got to get Friar Hass on the program if you haven't already. He seems to do a good job of monitoring all the various DCA products around the whole world. He's got a list, I think.
Nice. Well, that's kind of topical, right? Like we're trying to have a conversation for a few months at least. And I watched you a few times on Swan Signal. I think they do it. You've been on with Preston Pish and just by yourself, and you have like a really solid understanding of the institutional side of things and the way corporate treasury guys and CEOs and everybody like thinks about Bitcoin as an asset class. So it's always good to get that perspective. I imagine like some of my listeners are probably where maybe they have that background, and probably a lot of them don't. So it's going to be good. I think people should, maybe this might go over their heads a little bit, but should try to dig into this stuff because it's one of the most huge things that's happening in Bitcoin right now is the institutional buying, which is one of the main reasons why the price is going up so much. So we just hit an all-time high today. Why do you think it's safe for people to buy Bitcoin even still? Like when you wrote your book, it was what, probably like $5,000 or something like that?
Yeah. I think the number in the book was 8,500. I started writing the book when it was at 3K, right, in January of 2019. Partly it was an exercise in strengthening my own HODL grip, right? I put paper to words like, wait, am I really right? Like, is this thing really, really real after crashing from 20 to 3 or whatever it was? But yeah, it's obviously we're at all-time high today. The NGU technology is in full effect, and I know that it's got to be difficult for new people, for noobs, for, I don't know, people coming from regular way, finance, the normies, my clients, for example. It's hard to stare at record high prices and think that it's a good buy today. But, when I published the book, my valuation was 400K per BTC. That was before the pandemic. So am I more bullish post pandemic? Yes, I am. Yeah, it's there's still so much upside that I see in the valuation and the thesis, not just for investment, but the reason to hold this monetary asset outside the traditional financial system. The case for that has just never been stronger.
So for people that don't know what NGU tech is, that's number go up technology.
Yeah, come on, Brad. We know
you.
We know your listeners know what NGU technology is, right? Probably.
I hope so, but I've never said it on here before, so I figured I'd give that one for people. I bet you there's people that are like, "What's NGU technology?" And then they're going to CoinMarketCap looking for the NGU coin or something like that. NGU technology. I should get some NGU coin.
That's right. I got to get in on that trade.
Yeah,
I got to get in on that trade.
So you started writing your book back in 2019, and I guess at that point there was a lot of talk about the institutional buyers are going to come and they're just getting ready. The pipelines are being laid right now. It takes a long time for these guys to get ready. It was the long sort of like, even through 2017, 18, it was the institutions are coming. It was, Mike Novogratz from Galaxy was famous for saying that. I think Pomp was saying that stuff too all the time. The institutions are coming and the herd is coming. Well, the herd is here, and this is what we see in the price. So as you said, people looking at the price now, and especially when they go and look at a 2-year chart or something, it just looks absolutely like a scary mountain that Bitcoin just climbed, and they think, well, it's got to come down, and a lot of people end up waiting to buy Bitcoin because they think the number is going to go down, and then they're going to buy it a 50% draw, like retracement. And a lot of people end up missing buying Bitcoin because they just look at that precipice that it's climbed and they think, oh, that's too steep. Like, it has to come down. So why do you think, Andy, that because the institutions have come, why do you think that it's less likely that we're going to see something like a 50% drop at this point in the cycle? Or do you think we might?
Yeah. Oh, man. So that's a good setup. Lots of different threads in that one. First thing I'll say, by the way, Brad, is I got caught up in the 2017 institutional hype too. So, I fell for that little fake out maneuver. We thought institutions were coming in size, and we were 3 years off, or whatever, 3.5 years off. So I made that mistake myself. Yeah, no doubt that a linear plot chart of the price of Bitcoin looks absolutely frightening as an investor, let's say, or speculator, or whoever, whether you're a professional investor or you're just an average retail customer. And so, yeah, I try to look at the log chart. That's one lesson that we Bitcoiners all learn. And it doesn't look quite as scary on the log chart. It looks more like an adoption curve, although you still have those large, historically you had those large up moves and then downward corrections. I do take some heart from the data. I think it's primarily Glassnode. Your friend Willy Woo has been on top of this phenomenon, which suggests that the coin flows indicate that they're moving a lot of coins into cold storage in a way that hasn't happened in prior cycles. And so if true, and it looks like it is pretty true, that does suggest that a lot of the demand is coming from quote unquote institutional buyers, whether that's investment funds or it's corporate treasuries. And we saw it in the Coinbase numbers that came out recently, last week, I guess it was, the first quarter numbers, when something like half the, let's say, digital assets, whatever, half the crypto that Coinbase is custodying is institutional clients, as they define them.
Oh, interesting. I don't think I saw that.
Yeah.
That's cool.
So, I mean, that tells you it right there, because they're the largest, we think, I don't know, buyer and custodian of Bitcoin and crypto in general. And you see it in their Q1 numbers. So yeah, it looks like the institutional buying is for real. I think it's here to stay. And yet it's still early, right? There's not that many companies that have come out publicly and said, yeah, we're buying this stuff. I think that the number of companies that are actually buying it, is probably a multiple of what's been disclosed, either because it's private companies that don't have to talk about it, or it's public companies that haven't met some materiality threshold. Like, do you really have to disclose that you're buying Bitcoin if it's less than 1% of your treasury? I'm not sure. It's probably a judgment call on behalf of the CFO or the treasurer. So yeah, I think it's a real trend, and my expectation is it continues.
Yeah, there is a lot of growth, like you said there, that if a lot of the institutions and Fortune 500 companies and stuff are not yet buying, but maybe they will buy at some point, then yeah, there's a trend of the Bitcoin coming off the exchanges as the buyers of these Bitcoin take them away off from custody and into their own custody, and as there's less supply available for the new institutional buyers and the new retail traders and people who just have been waiting for the dip and they're never going to get it, and then finally they just capitulate and just buy, which is the right move. As all those people come in, it's just less and less Bitcoin for sale on the market. Now, these institutional buyers, right, they don't just go and market buy. They will do things like OTC trade and set up private deals with directly from miners to get like fresh Coinbase reward coins. So they're not going to just be like piling their Fortune 500 bank accounts into Coinbase and Swan Bitcoin and just saying, I'm going to dollar cost average $1 million a minute and get their position in Bitcoin. But like, do you think that the institutions, from a game theory perspective, the people that have hundreds of billions under management, right, like the sovereign wealth funds, the endowment funds, the retirement funds, do you think that they kind of have a incentive to front run each other, or do you think they're being patient and like communicating with each other and saying, okay, we all want to buy some Bitcoin, let's not drive the price up? How do you think that's going down? Or what do you think?
Yeah, a lot of good thoughts there. So one is, I doubt that they're coordinating or colluding. There's too many of them. Now, the one exception to that would be, if you count, large central banks as, quote unquote potential buyers. Are those guys, colluding? I don't know. Maybe. We don't think they're involved yet. I'm talking about the big country central banks. But if you're talking about sovereign wealth funds and pensions and those guys, I think it is those guys are so slow moving, and they have such a process because, part of it was laid out in the Michael Saylor playbook. I mean, he just came out and explained what he did, right? And he talked about, okay, I had to do my due diligence on custody and tax and accounting and legal and all these basically experts I have to consult. Some of them are employees within the organization, some are outside experts. And then once you've run, obviously involving the board or the deciding body, in the case of a pension, it's the investment committee, which will have multiple people, and they'll want multiple rounds of research and due diligence, and you got to write memos and you got to give presentations, and it's just on and on and on. So it takes a lot of work for these institutions to get anything done, basically. And then, as you pointed out, once they've got the the approval to buy, basically, then it's a question of what's the strategy to accumulate. Now, I think it was Peter Brandt I heard on a recent pod, and what he was talking about is he suggested that he had looked at the dynamics between basically bids coming on the market and offers. And what he said was, unlike in a retail mania like we saw in 2017, or like you see in other, I don't want to say bubbles, but let's say times of exuberance in financial markets, when you have just mad retail buyers chasing an asset, they basically just bid it up, and you get higher and higher bids. And what he said was, what he's observing is more along the lines of buyers aren't chasing price as much, or they're not chasing offers as much in this market, but they're basically scooping up every downturn, right? And that would be consistent more or less with the price action we've seen so far in 2021. Have we had a couple of significant corrections? Yes, but they haven't been, we haven't seen a 40% correction, right? Like we saw in 2016, 2017 time period. So the advance has been steadier. The drawdowns have been shallower so far. And all that, I would say, supports the hypothesis or the theory that institutions who are reluctant to really chase an asset and that's any asset, right? Whether they're buying, they're buying more Amazon shares, or gold or anything else, they'd rather be price, they'd rather be makers rather than takers on price. And so they're sort of taking their time. They're not rushing out to buy it necessarily and bidding the price up in a crazy way. But there's only so much volume that you can run through a process like that. And if you get a few more investment committees or boards approving purchases, then we could, get to interesting places up in the six figures in terms of price, right? We'll see how it goes.
Yeah, so I guess, the general rule that every investor should have is that you should think ahead about what your plan is for when you're investing in something. You shouldn't just be going based on your feelings, because that's how you get wrecked. That's how you buy tops and sell lows and capitulate at the bottom and use too much leverage and all that stuff. So you should, even as an individual, come up with like a set of portfolio management rules and think about what are you going to do when Bitcoin hits $200,000, or if it hits $1 million. Like, do you have a personal treasury strategy that what you're going to do at those points? Because if you haven't thought about any of that stuff ahead of time, then that's when it's just driven by pure human emotion, like the GameStop chart or like the 2017 bubble. It's just that classic Wall Street cheat sheet, crazy bubble run. Like you said, it's people just chasing the price, and then it just blows up, and then it corrects huge when people get really fearful. They start just continually selling. But as now there's this institutional demand, they have legally and like from all their shareholders, they're obliged to follow the rules that they set. So you as an individual, even though you don't want to be driven by FOMO and making all your decisions based on emotions, it's really hard as an individual to see a price go up and not feel those feelings and forget about your rules that you set and just start making trades and using leverage and, letting the FOMO take over. But for an institution that has clearly laid out rules, like they actually have to follow those rules, and there's whole committees of people that are involved in those decisions, and like the treasurer and like the CFO and all that stuff. So when in a typical market driven by a retail emotion, like a retail trader, an emotional driven market, when the price goes down, that's when you should buy, but that's when everybody usually just holds or sells because they start to panic. But when the market is really made up of institutional buyers with professional trading strategies and boards and teams of people, you really do see, like you said, like that's why we're getting less volatility this time, because they have rules that say when the price drops 10%, buy more. And when the price drops, we see like all this crazy volume coming in, and these dips are getting bought up like crazy. It's definitely like there's a lot of buying action happening on the exchanges. It's pretty crazy.
Yeah, and you've been around this market. You've been involved in Bitcoin far longer than I have, I think, Brad. And so it's got to feel a little different, right? I mean, you have to look at the price action and how the market's behaving, and you have to say, okay, this does look more institutional driven in the sense of less craziness, maybe a little less emotional driven, swings. I mean, is that what you see, having been through a couple cycles here?
Yeah, man, it feels like it feels safer for some reason. Like I feel safer buying at these prices than I did at 10,000 or something in 2017. It just feels like the markets before were all FOMO driven, and now it kind of feels like there is this professional class of investor out there who really does want allocation. They don't want to just invest in it as a trade.
Yep.
But they want allocation, and they're not going to just trade it. So it does feel a bit safer and that it's less volatile, but I don't know if that's like, I don't know, man. I don't want to feel that, because that's when it's going to drop 50%. I'm like, oh shit,
at least
sell.
That's right. Bitcoin takes the most painful path, right? Possible, as if by some magic rule of the cosmos. Yeah, I think, and just to touch on something you said earlier, which was basically have a plan, right? I do think that on average, most institutions have a plan. Now, that doesn't mean that they are totally immune from psychological and herd behavior. In fact, when it comes to herd behavior, sometimes institutions can be the worst. I mean, you could argue, why did it take Michael Saylor to break the dam? And we can argue about, it was Paul Tudor Jones, or it was Michael Saylor, or it really happened with PayPal, or there's various sort of proximate catalysts. But I would argue, he made a real dent here, and so you could say, well, why? Basically, institutions. The counter argument would be, the on ramps weren't really quite finished, like the custody wasn't quite easy enough, or there wasn't enough market cap. So a lot of investors looked at it and said, it's a $200 billion market. That's like a single mega cap stock. It's too small for me if I'm a sovereign wealth fund or a large pension. So you can, and those arguments have some merit. But you could ask reasonably the question, like, why weren't the institutions, buying hand over fist? Why weren't they doing their DCA right in 2019 and 2020? And I do think it's because of that herd behavior. It takes some critical mass of investors to say, yeah, this is real. I'm talking about in the institutional space generally, to finally force people to pick up their pencils and do their due diligence and really try and understand Bitcoin. And then come to the reasonable conclusion that there's a real significant opportunity here, even from much higher prices than we saw in the past. But the institutions are not totally immune. One other thing I'll say, by the way, with respect to sort of having a plan, is and this is a general concept, in my opinion, in the investment world, to make quote unquote alpha, right, to beat the market or beat a benchmark or basically beat the crowd, there's a few ways to do it. There's hard ways and there's easy ways. The hard way is to actually find unique information that nobody else has found, right, and have basically an inside track on truth and reality when the market doesn't, and then trade against that. So basically be non-consensus and be right. Well, that's great if you can pull it off, but in a world awash in information, it's pretty hard to do. A better way to make alpha is to find a situation where you've got information that the rest of the market may or may not have that information, but there's some significant portion of investors, the investment base, that's constrained somehow, right? So like distressed investing is a classic case. Sometimes you get basically investors, bondholders, bank debt holders, that once you've got a default or some kind of event that's negative for a company, they have to sell. They're just forced sellers. So it's a good thing to be on the other side of a forced sell trade, right?
Right.
In the case of Bitcoin, I think there was some of that dynamic with the institutions, in that they didn't have the information, they didn't have the investment thesis, in part because the asset was too small. So they were sort of structural, not forced sellers, but they were sort of prevented from being buyers. And because they were prevented from being buyers because the asset was too small, they didn't bother to do the due diligence and the homework. And so you had, I think you can construct a case there where it was a pretty good setup for the individual investor to take advantage of the institutions, which is sort of a long-winded way of saying what everybody said, which is like, okay, this is the first major asset that retail had a shot at before the institutions, but there's reasons for that. Mm-hmm. Now, by the same token, as the bull market unfolds, one should be always thinking about, and this is true of Bitcoin or any other asset or investment, is how am I unconstrained in a way that others are not, right? How are the institutions constrained in a way that I'm not? And I don't know if I have an answer yet with respect to Bitcoin specifically, but that's something we should all be thinking about, is how can I trade smarter or more effectively, because my counterparty is, there's some rules against what, he or she or they can do.
Yeah, that might be a tricky one, because Bitcoin, that's the good thing about Bitcoin. It's the same asset and it gives the same opportunity to anybody. doesn't matter if they're a big institutional buyer, like the treasurer of a Fortune 500 company that's looking to buy Bitcoin, or some poor person below the poverty line in the US that's just putting their minimum wage job money into Bitcoin. It provides the same benefits to everybody. I would think that the only way to kind of take advantage of that is to do things like start veering off under the risk curve and start getting into the altcoins and the DeFi farming and all that crazy shit, which would be just not wise.
Don't say it. Don't say it.
It wouldn't be wise for the institutions to do that. It's way too much risk for them, and I don't think that regular people should be doing it either, especially not with their Bitcoin.
That's right. That's right.
Don't risk your Bitcoin on that stuff. Maybe some dirty fiat, because that's useless crap anyway. So just get more crap with the crap, but don't risk your beautiful Bitcoins on Ethereum.
I agree.
DeFi.
I agree, Brad. I mean, I've been already surprised at how some of these left for dead altcoins have rocketed in recent weeks. It was looking so good from the maximalist point of view. It was looking so good for so long that Bitcoin was just leaving everything in the dust, and now that rule has partly been broken a little bit, and it saddens me a little, but it is what it is.
Yeah, it's like we learned nothing in the bear market, because nothing's changed really in terms of what's going on fundamentally in altcoins. It's pretty much the exact same thing. The only difference is now they've got the ICOs are the DeFi projects, and they're more, and they launch them pretty much when they're finished, rather than raising the money and then launching them. Yep. But they're still utility tokens that don't really have any fundamental long-term value. The only thing that's different is the Fed is just like more brazen about how much they're just going to keep propping the markets up, every market, keep all the interest rates down, just keep flushing tons of money into the system. So in that world where the Fed is like propping every bubble possible up, like Pokemon cards are going up like 5,000%. Like it doesn't matter what fundamental value your DeFi coin has. Just go look at any of those left for dead coins, like you said. Any of those crappy ICO projects, they're coming back from the dead. I have a friend who invested in some ICO in 2017. He put like $100,000 into it, right? And he got wrecked. He lost everything. The thing's worth $1 million now. It just shot up like crazy. He sold it all for Bitcoin, and he's like so happy. But that thing should have just completely died. But we're back into this market where everybody's kind of like got maximum risk on because the conditions are there. Yep. So the bubble is inflating like crazy in crypto, specifically in NFTs and DeFi. And it's kind of like I got all these friends that are super smart coming to me now, being like, "Oh yeah, I'm so excited about Bitcoin. I'm gonna buy some of this yield farming coin." I'm like, "How did you even learn about that? And why do you think that's the same as Bitcoin? Because it's not. It's not the same as Bitcoin."
So I mean, Brad, I look at my personal journey, right? And I made the usual journey from Bitcoin to altcoins and back to Bitcoin.
Mm-hmm.
And I think a lot of people make that journey. I'm jealous of those who are smarter than me, who just, understood Bitcoin, from the get-go and focused there, because I still think that's the right, move. Whether you're thinking about, the characteristics and the uses of it, actually transactionally, or whether you're talking about, risk-adjusted investment. I mean, it's still the best risk-adjusted return opportunity, in the market.
That's hard for like regular people to understand, but that's really important. Risk-adjusted return is, it sounds kind of like, okay, whatever, it's a complicated tech finance term or something, but it is really, it's kind of like the Pareto rule for investing. It's like you can put in 100% of the effort and get 100% of the results. Like you can spend 80 hours a week researching and watching your trading and using leverage calculations and all that. And you can like really treat this as a real professional investor, and you can probably beat the market and get alpha over Bitcoin. You put in 100% of the effort, you get 100% of the results. Unless the bubble pops. That's a separate thing, right? If the bubble pops, you're right.
Unless you pay taxes.
Yeah. Well, even in this market, like my buddy who made like 7 figures off this old dead ICO bag, after he pays his taxes, he's still golden. Right. He's still doing really good. So he's like probably up about 1.5x over Bitcoin. So it's after paying his taxes and all that stuff, factoring the rise of Bitcoin price. So he's still ahead, right? So he got 100% of the results, but he didn't do 100% of the effort. Actually, he completely gave up on that coin. It's just some whale pumped the shit out of it, and they're spending tons of money to pump it, like with all this fake volume on the exchange that sucks in real traders and being like, oh, this thing is an active coin. I'm gonna start trading it. And then so anyway, he dumped his bag on them. He got out. So a lot of these popular people now, like when you're coming in, you're Googling what's Bitcoin, you go on Bitcoin Twitter, you're seeing all these crypto influencer people that are just recommending people buy this coin because it's better than Bitcoin, and this coin because it has yield, and this coin because Bitcoin is an old boring boomer coin. And they're just so ridiculous. But the thing I try to tell people is that the risk adjusted return thing, but it's really, if you just buy Bitcoin and go back to your life and don't try to become a penny stock trader or some kind of inside trader or something like that, that's 20% of the effort, and you're going to get 80% of the results, because Bitcoin is going to be pretty much representative of the growth of the entire cryptocurrency scene. If Bitcoin doesn't win, everything's dead.
Yep.
Like Bitcoin fails, everything fails.
I'm going to push it farther too, Brad, which is, you said you'll get 80% of the return, basically. I think you're actually more likely to get 100% of the return, in the sense that, you said, okay, if you dedicate yourself full time to it, you may be able to pick off a little bit of return net of taxes. And what I would push back and say is, I think that's true for 5% of people, but for 95%, even if they put in the time and the effort, they're going to get the timing wrong, or they're going to make an emotional, move at the wrong time. And they're still not going to get, end up ahead of the game, basically, versus buying and holding Bitcoin. So yeah, I think it's a real small and rarefied set of people. And by the way, it's unlikely to be the noobs, right? So in other words, anyone who's coming into the market now, the chances that you're going to have, alligator blood and not make an emotional mistake, or not make a error, moving coins from your Bitcoin on ramp to your, shitcoin casino, whatever. There's just so many ways it can go wrong, right? Mm-hmm. So I don't know. I really caution people against trading, versus buy and hold and hodl. And as far as having a plan, something you alluded to earlier, which is like, I'll just, tell you straight up, be honest. I can only speak for myself in this regard, which is I'm still accumulating, right? I'm still doing the DCA. I'm a net buyer of Bitcoin every week.
Nice.
And, will that eventually stop? Like, is there some price at which I'll take a little bit off the table? Yes. I probably won't tell you what that price is, and it won't be useful to you or anyone else anyway, because everybody's personal situation is different. For the vast majority of people, especially if you're, I don't know, new, quote unquote new, like if you've gotten in the last few years, unless you have a giant stack, probably your best bet is just to continue to accumulate, regardless of the cycle, right? Mm-hmm. Because most people are underallocated Bitcoin, right? They're effectively short Bitcoin. They don't have enough. I mean, none of us ever feels like we have enough, but most people don't have enough. It's really only the people that are sitting on pretty big stacks that are life-changing amounts of money, where if you peeled some off, you could, buy a second home or buy your way out of your current job, right? Buy yourself some runway, to go do something else, maybe work full-time in Bitcoin, for example. It's only those cases, I think, where it really makes much sense to sell, except at much higher prices. My 2 cents.
Yeah, that makes sense. It's like a tough decision right now, because I'm buying too right now, and I rarely buy Bitcoin because I got in early, so I'm pretty much like overexposed to Bitcoin in terms of my percentage wise of my net worth.
Sure.
I've been overexposed. Like every time Bitcoin pumps, it's like, oh, well, I should probably reallocate based on risk management and traditional portfolio management theories and stuff that I learned from like reading books and like traditional macro stuff and, Ray Dalio books and whatever. So I try to like override my dumb gambler mindset, my noob investor mindset that's going to end up just making me buy high and sell low, by using portfolio management strategies and risk management strategies that I learned from institutional people and professional money managers and stuff. I wish I never listened to them. I don't have as much Bitcoin as I once had because I thought I was being smart. And I was so convicted on Bitcoin. Like I've always been convicted on Bitcoin, but I just was making these decisions based on like, this is a smart thing to do because this billionaire says to do it. So I guess I should do it. I wish I never did it, but I also made some dumb moves not doing it. So I was afraid that if I was not practicing some kind of portfolio management strategy or whatever, then I would do something like go all in on some like 10x leverage bet when I really think the price is going to moon or something, and then get liquidated when the stop hunters come out and just like drop the price just to my stop level, liquidate me, so I'm done. So I don't know. What do you think? Do you think it makes more sense to follow a conservative portfolio management strategy of diversification and maybe a sell 1% on a double, like a simple sort of strategy like that, even though it might end up netting you less Bitcoin in the end because you're following the strategy? But the benefits of that is you've got a strict way of viewing it versus just the total like degen hodl mindset. It's like total conviction. I'm just 100% in Bitcoin and I'm never going to sell. What do you think like puts you and ends you up in a better position?
No, this is I love this question, Brad, and it's very difficult to answer. So, I come from the dark side, legacy finance, right? I come from the exactly portfolio management, exactly what you said, rebalance your portfolio, right? Some asset that you own doubles or triples or whatever, cut it back to where it should be. Okay. Now that is a portfolio manager's mindset. It's a risk management mindset, and it's a way to avoid getting poor, right? It's a way to avoid disaster on any single asset, concentration risk. Okay. Makes a lot of sense for a lot of people. Now, on the other hand, it depends on what your goals are. For other people, let's put it this way. Portfolio diversification, as they say, is not how you get rich, it's how you stay rich. So will you get rich using that technique on a portfolio? Much harder. The way that most people get rich is by concentration. And that's either concentration with their talent and their labor in their jobs, or it's concentration with their investing, or sometimes it's both, right? In the case of the entrepreneur that, goes all in, tries to build a company, and oftentimes those fail, but sometimes they succeed spectacularly. So if you're young and you think you understand Bitcoin really well, and you don't see yourself getting this kind of opportunity, more than once a decade or even once in a lifetime, should you go big into Bitcoin? I'm not going to tell you not to. And then the question is life circumstances. So let's say you've got a stack and, it's life-changing money basically at some point. And there's no bright line for that, but every one of us has a number or a couple of numbers in our head where we say, oh, given where I live, given my family circumstances, this is quote unquote enough. Or if I sell some, I could do something great for my family or do something great for myself or for my career, or maybe I could quit my job, whatever it is. In that case, yeah, maybe it makes sense to peel some off if you're really extremely concentrated and convicted. But it's the type of thing where with my professional hat, and again, none of this is investment advice, the usual disclaimer, I should tell you to diversify and rebalance. And then my Bitcoiner hat, I say, oh, the reason I went to the trouble of writing a whole book about this thing, which is unusual for a professional wealth manager, to single out one asset and put pen to paper and write 150 pages. The reason I did that is because I saw it as a rare opportunity. So the answer is case specific, and it depends on your personal circumstances. And there's no one size fits all with that one.
I think I think there's a balance where you can, like you said, like look at it from both sides and be aware and have conviction and maybe be over allocated and concentrated in Bitcoin if you have the conviction, and also practice some kind of anti-gambler rules or something, or just like maybe lock a certain amount of your Bitcoin in cold storage so you can't access it for margin trading, or use Casa like 305 and put one of the keys in another country or something like that. So it's like really difficult for you to get at your coins. Because I know a lot of early Bitcoin people that ended up losing significant amounts of Bitcoin because they were taking too much counterparty risk by leaving it on exchanges, or they were trying to make back their Bitcoin stack. Like maybe they had 10,000 Bitcoin in the early days and they ended up selling most of it and they only got 100 left or something. And they're like, okay, I can 10x leverage this. We're going on a bull run. I can get back to 1,000. And then they get stop hunted and they lose half their Bitcoin again. Like if you don't have risk rules in general of like how much of your net worth or whatever you're willing to risk on this stuff, then I think you would be better off, and you can still be convicted. And yeah, kind of like you said, it depends on your situation and what makes you happy, I guess, as well as a factor in that.
Yeah, and it depends. I mean, as with many things in life, sometimes it helps to think in the extreme cases or the limit cases, right? I like how you said, by the way, only 100. You only have 100 coins left, as if that was a low number.
Well, I'm talking about early people, that had like 10,000.
Yeah, right, exactly. Yeah,
imagine that. Like, it's hard to get over that for a lot of those people. I still think about like some friends of mine that like I had a buddy that lost 25,000 Bitcoin in mybitcoins.com.
Oh my God.
It was not worth like it was maybe, what was it, like $20,000 or something at the time, but no, it was more than that. It was more than that. It was like 100,000 or 200,000.
Right.
But that's like, how do you get over that? That's
tough. I will apologize because I think I've told this story before, but I have to, partly because I put it in the book, which is my worst investment ever. Okay. And the worst investment ever was buying Netflix stock I bought 1,000 shares at around $50 a share, or sorry, that can't be right. 1,000 shares at, yeah, that's right. It was about 50 grand. And it was in 2012, I think. And the stock went up like, I don't know, 75%. It was a great trade in like a few months and I sold it, right? The worst trade today, by the way, that stock would be worth, I don't know, between $2.5 and $3 million.
Oh, wow.
So the worst trades are not when you buy and lose 100%. The worst trades are when you sell, which you could have made 50x on, right? Or whatever the number is. And this is the story of Bitcoin. So the solution for me with those kinds of situations is, in retrospect, what we know about Netflix, what we know about Amazon, what we know about Google, all the internet giants, all these network effect, internet native phenomena, is everybody has underestimated their upside, right? And so the lesson for these kinds of assets, of which Bitcoin is one, is it can always get much more valuable and much bigger than you think possible. I mean, unless we're talking about really ridiculous numbers, which some Bitcoiners like to talk about. And so never sell it all, it's okay to peel off some as you go and think about how much regret you'll have for whatever, losing those, 10,000 coins or selling a few hundred at lower prices. As long as you maintain, the majority of your stack, hopefully you'll be able to live with yourself and sleep at night. And then, of course, numbers matter. So, like, I'll pick an arbitrary number. If you got 1,000 BTC, okay, and you're holding out for higher prices, maybe you're holding out for 100K, and maybe we get to 100K in the next few months. Maybe it might be a little foolish not to sell some because you're at the level of never have to work again money, right?
Mm-hmm.
Would it make sense to maybe, buy a couple properties, buy some real estate, have some diversification so that you can just sleep well if we have another savage bear market? Yeah, it probably makes some sense.
I don't know if it does, man. Okay, let's think about this. So if you got 1,000 BTC, you could collateralize 10% of it.
Sure.
or 5% of it, and be able to buy that house and buy that boat and, you know, do some really nice, you know, significant things. But the risk there is that if the price drops 50%, you got to throw another 5% in to stay liquid, to stay, you know, from getting margin called. And now all of a sudden, now you got 100 Bitcoin that's tied up with, you know, and the rest of your Bitcoin's down 50%. At that point, I think it's like you should probably throw the towel in. But it would have been much better to probably have sold 5%.
Yeah. Yeah.
instead of collateralizing it and suffering through a crash.
There's no bright line. There's no right answer here, because that, you know, people talk about, I had this conversation, I've had it with several, you know, very hardcore Bitcoiners who they're basically of the view that I'm never selling any, right?
Right.
Either
right.
I have a fiat job, I have fiat income. So, you know, I can support myself and my family, you know, even if we have a multi-year bear market, or I'm just so convicted about it and I'm so sure that we're not going to have another 80% drawdown or whatever the number is. And the problem with that perspective is there's no such thing as true over collateralization with Bitcoin, right? There is no rule that says you can't for a split second go down 90% in price. I'm not saying it's going to happen.
Right.
It's quite unlikely. And you are always at the mercy of your counterparties where you posted that collateral. And then that's, you know, not to speak of, you know, just the general collateral and counterparty risk. And so it's like, yeah, with 10% of your stack, is it okay to take out a loan that's over collateralized? Sure. You know, if you lose that 10% of your stack, that's a bummer, but it's probably fine. It's when you get to larger percentages that I caution people about it.
Okay, so let's do the math on this. Bitcoin just hit 63,000, so all-time high. Yoo-hoo! Give you a cheers there. Cheers. So that 1,000 Bitcoin, that's $63 million. Is that right? Am I doing that? Yeah, so $63 million. So say you take 2%. I think 2% is safe for that guy who's got 1,000 Bitcoin, Mr. Whale that's watching. So 2% is 2 Bitcoin, 20 Bitcoin. So 20 Bitcoin is 1.2 million.
Right.
So you have to over collateralize. So you're only going to get about $650,000 from that, right? So
with 2%, I mean, that's super 2%, conservative.
That's pretty conservative.
You could risk more than 2%.
I don't know, because let's say worst case scenario. So you get 2% at risk here. You've got 20 Bitcoin in. You get $625,000 or something like that. Now you can go put the down payment on the house or buy the house outright or whatever. Enjoy a little bit of a comfy fiat lifestyle for a little while. Then Bitcoin drops 50%. So your $63 million worth of Bitcoin is now, what's that, like
30? You're saying it drops by half?
Yeah.
Which is still a lot of money.
Still a lot, but it sucks to see 63 to go down to 30 some or whatever. And you have to put in another 20 Bitcoin to keep your loan collateralized. So now you have 40 Bitcoin, and that's worth 1.26 million still. So you've got 4% of your Bitcoin now for that same loan.
Yeah.
And then it's very unlikely that Bitcoin drops another 50% to go back down to like $15,000, but it's in the realm of possibility. If the government's turned against Bitcoin and really, like, we see Executive Order 6102 and World War III breaks out and, like, you know, the shit really hits the fan.
Right.
And, you know, that's going to be, now you've got 80 Bitcoin in there now. So now you got 8% of your Bitcoin at risk and you're down to like $15 million in value. Yeah. It starts to feel like pretty shitty, but at least you didn't lose it all. So it's like, people should be, that's when I talk about planning and like following all the do the math on it, like figure out what you're going to do, because taking loans on your Bitcoin can be a really good way. If you've got a conservative sort of loan strategy, it can be a really good way to like not miss the upside. Because the alternative to that is what, Andy? We go to 400,000 like you predicted in your book,
or higher. Anything's possible. But I really like the math, Brad, that you just did. I mean, it really illustrates the point. And it's still, you know, for the amount, we use the 1,000 coin case, I guess. And there you're still wealthy But if you divide, if you take the case of someone who's got half that or a tenth of
or
that,
more likely like 10 Bitcoin or something.
Yeah.
Like someone's probably going to have
Right.
10, right?
That's right. Then you're really realizing, oh, this could be pretty painful for some period of time. And so that's why I sort of like if I'm going to post collateral and get a loan, you use the sort of 50%, I guess, loan to value concept, I think, in that math.
Yeah.
I probably prefer to risk posting more collateral at a lower loan to value amount at the outset.
Yeah,
so
that
I'm
makes
not,
sense.
well, it's the trade-off, right? It's
do like 70% loan to value or something, get it down to like 3-4% maybe.
Yeah, or the inverse, like basically, yeah, if you're posting $1 million worth, only borrow 300K.
Right.
You're posting, yeah, that type of situation. Now, there's trade-offs to that. One, the good side is there's less risk that you have to post more collateral at painful prices later, like you were just outlining. But on the other hand, the downside is, you're, for a given amount that you're borrowing, you're posting more collateral with that counterparty that you may or may not be able to trust to, has a risk. So no free lunches in Bitcoin, huh?
Yeah, if you want to enjoy those degenerate benefits of dirty fiat money, you gotta put your Bitcoin at risk, which is not great. But yeah, it's a tough one because we don't know if the price is going to go to the moon and never correct 50%. We all hope it doesn't, right? We hope that this trend continues and the volatility keeps dampening as bigger institutions get in and continue employing more algorithms to buy the dips and slowly accumulate. And there is only like 2-3% of the world that's allocated to Bitcoin. So it does make a lot of sense that we would just continue to slowly
grind higher.
Yeah, just keep going up. And of course, when macro things happen, there would be price drops, but hopefully not 50%.
And this is why I caution people against the lending market today, which is like, the tax advantage logic is unassailable. Like, obviously it's better to not pay tax, and you have to, if you're complying with tax rules and you're not holding it in your IRA, then you have to pay tax when you sell Bitcoin. So that's that. But on the other hand, just me personally, well, actually, so disclosure, have I posted a small amount of BTC, at a company that pays me some yield on it? Yes, mainly as an experiment, but it's not a large percentage of my stack. Small, very small. So that's one.
What percent are you talking?
Like a few percent, maybe.
Oh, that makes sense.
Yeah.
As long as you're not like mixing the like, if it's undoxed Bitcoin, you don't want to be sending your your clean Bitcoin.
No, this is sadly this is
dirty
exchanges. This is full KYC. Okay. In the surveilled system BTC. So what I was going to say is, have I thought about the possibility of borrowing against Bitcoin collateral for myself? Yeah, of course I have. And I've kind of decided against it until we get the right debt structure. So back to Michael Saylor. Why can Michael Saylor go all out, all in essentially on Bitcoin? Because he did it with 5-year maturity debt. Okay. Right. So he bought himself, as long as his.
What does that mean? Like, if for like somebody doesn't get the markets for
totally
markets, yeah.
And I'll use the example of, actually even better is a mortgage, right? Again, this is not advice to go mortgage your house to buy Bitcoin, but I will contrast it against what we've been talking about, which is Bitcoin collateralized loans. What we've been discussing about, hey, you have to post more collateral if the price falls on Bitcoin on your loan, that's a classic margin style loan. It's existed in financial markets for a very long time. It's the same thing when you buy stocks on margin, right? You take your Robinhood account and you YOLO, and you not only, go long Tesla or whatever, but you borrow money to do it, right? Well, if the price moves against you, you get a margin call. And if you can't meet the margin call, you're liquidated. Okay. That's not a great way to invest. A better way to invest is if you're going to use debt, okay, if you're going to have debt to lever your investment, which is really what we're talking about. I mean, when you're talking about you bought Bitcoin unlevered and then price goes up and now you're borrowing against it, effectively that's the same thing as investing on margin, right? You didn't have the margin debt first, but now effectively you have it after you've taken out your loan. Now, something like a house, mortgage debt is a different kind of debt. If we have a deep recession and the price of your house falls by 50%, you don't get liquidated if you can make the mortgage payment, right? If you can make your interest payments, and in the case of a mortgage, usually you're amortizing the loan as well. But as long as you can meet that monthly check, you get to keep your collateral, you get to keep your house. That's the similar concept with MicroStrategy. MicroStrategy is a company that generates cash flow as long as they can service the interest payments on those convertible bonds that they issued. They're okay, right? Very different from the margin debt structure where the value of the asset that you posted as collateral falls, which allows them to liquidate that asset in order to cover the debt right now.
Seems like a much safer thing to be able to do then.
Much safer.
Why can't we issue personal bonds like that? Why can't we just say, "Oh, I'm going to pay you 1%. Give me $1 million, market."
Because you're not a cantillionaire. You're not a cantillionaire, Brad. Maybe you are. Yeah, no, corporations can do things that individual people can't. Now, what I was suggesting is what an individual can do it with is a house, right? That's the one major asset class.
Okay.
That people own.
Yeah.
And where they have, a significant asset to post as collateral. You do a home equity line of credit, you take equity out of the house, and then you invest with that. Am I recommending doing that?
Yes, and I'm going to go do it today. Thanks for the advice, Andy. I appreciate it.
But if the question is like, which is a better structure, clearly what I just described where the debt is, the debt is basically something you can service as long as you can make the mortgage payment, the interest payment, rather than the price of the asset that's collateral goes down and you get yanked, the rug yanked out from under you.
Margin calls are like so it seems like such a scam in a way to me because it feels like the system is rigged against the customer to margin call them. Like I was a LP in Adaptive Capital, and they were doing amazing. They were doing great. And then it was just this crazy day of volatility where they were taking too much risk. The fund manager was taking too much risk. And like, there's kind of like evidence that I've seen on YouTube and people on Twitter saying that like BitMEX goes and hunts for stops and the order books go down, or like the liquidation engine will mess up or whatever. So I wouldn't put it past any of these big, they're casinos. Like I do not recommend people mess around with leverage trading unless they're doing something like a certain, like a portfolio management risk strategy. Like 5% of my portfolio is more than that is never going to be risked on margin trading. Cause you never know when you're going to get margin called. And it does make a lot more sense to do it with your house or your company bond equity or whatever, so that you can't get margin called on that. It's just, how does that work? What do you get? You just get more time? What if you stop making your payments?
Yeah. And, I return to the parable, right? The parable of the 6-foot tall man that drowned crossing the river that was 5 feet deep on average, right? On average is key. You can be right. You can be 6 feet tall and the river is 5 foot deep on average, but there may be a point where it's 8 feet deep. And even if that point is fleeting or small, if you don't know how to swim, if you're not protected, you're dead. And that's the risk of ruin concept in investing. And it only takes a second. I've had personal experience. There was a time when I was doing levered, speculation, let's say, basically on currencies. I had a trade on, I can't remember if it was euro or yen, into the 2016 election, right, when Trump won. And it ended up being the right thesis. Like, the position would have made money in the long run, but markets, if you remember, threw a fit that night. It was basically panic, right? it was risk off. Stocks went down, treasuries went up, gold probably went up. My guess is it was probably dollar. I was probably short dollars, and dollar rallied because it was panic. And I got partially margin call. I got partly liquidated on my position, and it wasn't ruinous or anything, but it was painful, and I was licking my wounds. And yeah, what you described, what I worry about the most, basically, for, I don't know if I want to say, Bitcoin plebs or average people investing in Bitcoin, is I just worry about them pushing the envelope and getting liquidated and getting the rug pulled at the worst possible time. I don't think I answered your question. I think I went on a tangent there, but
well, that's a good segue into the, it's not a segue. It's just a conversation that moved from one topic to another. That's fine. I do wonder about the new people and the really convicted Bitcoiners that I hope they don't take too much risk. And the new people, I worry that they're going to be trying to leverage trade and trying to buy altcoins to get returns because they're getting bad information. I worry more about that. I think that's a bigger risk than like the Bitcoiners that are super convicted, like all of a sudden taking too much leverage, because the community or the memes or whatever around Bitcoin Twitter is kind of like, not your keys, not your coins, don't trust, verify, anonymity, privacy, coin join. Like, that's all of that ethos is really good for not putting your coins on a casino and hitting the 10x leverage button. So I think it's less of a risk that the Bitcoin plebs or like the new people coming in will go to the casino and pull the slot machine, but it's more likely, I think, that new people coming in will be like buying Bitcoin on an exchange, and then the exchange will like shill them DeFi coins or something like that, and then they'll start going all in. They'll sell all their Bitcoin and start buying all these super risky altcoins, thinking
yeah,
it's
I totally agree.
The price is lower, I got to get some of these.
I totally agree with you on that. And my only, I guess I'll take, so counterpoint on that argument. I think you're right. There will be more pain felt. There'll be more financial damage done on what you just described. So I think you're spot on about that. I think maybe I don't know if it's my loyalty toward Bitcoiners, but when you talk about, the pain and being able to, sleep at night, and just the psychological anguish that could come, for sure, noobs piling a bunch of money into altcoins, getting wrecked, that'll be a painful experience. I think more tortured will be the souls of those Bitcoiners who had the thesis right, even for years, right? Yeah. Like, God bless the plebs, who found Brad Mills, years ago, and listened, and or anyone else, who's been out there talking about the opportunity in Bitcoin, and then they screw it up at the last minute, right? They wrecked themselves when they had all their ducks lined up. They had the conviction on the thesis. They'd done the hard work basically to understand that Bitcoin is the thing. Those may be some very tortured souls, maybe even more so than those who YOLO'd into altcoins. I guess it depends on where you came from. If you came from been in Bitcoin a bunch of years, and I've seen alt season before, so now I'm gonna pile in. Yeah, that's a painful way to go too.
Yeah, that is too. But I think it's like, you're probably right. The people that got the thesis right and they were like this early on it and they were convicted. Even worse is the people that got fished. Like, they got from that Ledger hack. There was a couple people who lost their Bitcoin to a phishing scheme when Ledger's, released everybody's cell phone and email.
Yep.
I know 2 people that lost their Bitcoin because of that. And like, that sucks. Like, you weren't even trying to take risk. You weren't even trying to gamble with it. You just got fished.
Was that, I'm just curious, that sucks, by the way. Was that like someone sent him a bad link on a firmware update and they...
No, it was more like somebody spoofs Ledger and they say, there's an update for your device. You have to click here and update your
Yeah,
device, and then.
that's why I said update on the. Yeah,
But it's
exactly.
not. They're not actually doing anything with the ledger. It's just a fake address that they ask them to put in their seed phrase, and they just steal it. They get their seed phrase that way.
Okay.
So they
Got
like they trick you into entering your seed phrase into a browser or something like that,
Yep.
and then they just steal your Bitcoin. So people never enter your seed phrase on a browser. Just be super cautious about suspicious messages from people, even if like we've got all these scammers impersonating us on Twitter. If I ever DM you and I'm like, if you give me a Bitcoin, I'll give you 2 Bitcoin back. Like, I'm a bad trader. Don't give it to me. That's a scam.
Very good advice. Very good advice. Yeah. Don't ever trust exactly. Don't ever trust anyone who's asking for your Bitcoin. I'll never forget, by the way, this was in 2017. And it was CoinDesk published an article about some airdrop. You know, it was like, I don't know, BTC holders would get some airdrop of some altcoin.
Mm-hmm.
And they actually had a link in the article. So this was like, newsworthy, printed on CoinDesk, take advantage of this airdrop. And the link was a scam.
Yeah,
I remember yeah, and I pressed on the link because what did I know? By the way, this was 2017. This is like I had only been in for, I don't know, a month or something. I didn't understand. And immediately it's asking me for my private key. Get the airdrop, for the Bitcoin you own, put your private key in here. And I'm like, wait a minute. And I have no doubt that someone fell for that scam.
Oh yeah, for sure.
It's painful, man.
There's so many scams. There's so many scams in this thing. People have to be super vigilant. Don't trust verify like 100%. Be suspicious of everything. Especially
everyone's
now.
A scammer. Goldstein,
everyone's a scammer, even us. We're all scammers. If we message you in DM, for sure we're scammers. Make sure it's Brad Mills, not Brad M111S. Like, that's not me.
Brad Mills is with 3 Z's at the end. Yeah. Man,
so I was wondering, Andy, like you said, you were from the traditional portfolio management world. So you wrote the book. How has the reception been? I know obviously the Bitcoin community has really embraced it and like recommends it, and you've got like a popular Twitter feed and stuff. But how is the world that you left? How do they embrace it? Or do you consult with companies, public companies and stuff now? Like what's your kind of life looked like a year after the book and being right on the Bitcoin call?
Yeah, I to be honest, I spend more time with, I would say, the hardcore Bitcoin community than others. I will say, I have done my best to try and be a bridge, right, between Bitcoin and legacy finance. I have done the one thing that I have done a decent number of times is, done talks with panels, basically with legacy investment folks. I have, especially with some of the the new Bitcoin products, basically that have come on market. They're like, hey, that Andy guy, he's a legacy finance guy, CFA charter holder, and he seems to know something about Bitcoin. So he's, he can be a Trojan horse for us because we've got a new Bitcoin product type of situation. And I'm happy to do those things. I don't, spend my time consulting. I do spend time, like if someone shows an interest, in Bitcoin, I'm like, look, check out my book. It's been my primary job is my wealth management practice. So that's my full-time job. Bitcoin is, more fun. I mean, obviously it's an investment for me. I just love the community, man. I feel so grateful and so blessed, that I get to talk to people like you, that someone's willing to, I guess, listen, to my perspective on a few things with respect to Bitcoin and the investment world. So the community has just been tremendous, and I just feel so fortunate in that respect. And I'm excited that I've played my very small part, in helping not only some regular way people, some some boomers, whatever the demographic may be that my book resonates with, although it seems to resonate with young people too. And that I've played some role in helping to, normalize Bitcoin in the institutional investment world. So I definitely don't want to overstate my role in that regard. I have done some of that stuff, behind the scenes, but it's been fun, so it doesn't feel like work.
So you're not like starting a consulting firm or something like that, going after that business. You're kind of just shooting the shit with us and managing money and watching the show and educating people.
Yeah, well, look, and I'll say this: I have gotten, it has been a sales channel for me. I mean, obviously, it's selling the book. I didn't write the book to make money, right? Almost nobody makes any money writing, publishing books. You have to sell a hell of a lot of books to actually make a profit. But I have gotten some, basically people who've heard me on pods or, read some articles, and I've resonated with them either because they're Bitcoiners. Well, it's probably primarily because they're Bitcoiners, and basically the clients that I've onboarded are either people who are Bitcoin friendly or they hold some Bitcoin, and they're like, look, most of the wealth managers out there don't get Bitcoin at all. So, if I believe in Bitcoin and it's sort of core to at least to my portfolio, but possibly to my whole life, perspective and ethos, then I better have an advisor that understands it. So I have gotten some inbound in that regard, and actually the amount of inbound has, sort of increased with time. So it has been a sales channel basically for my wealth management practice. That's true.
Right on. Where do you live at? Are you in the States or in Canada?
Yeah. No, I'm in Los Angeles, man. Sunny Southern California.
Are you trying to get out of there? Or are you gonna stay? Everybody's fleeing. Everybody's fleeing.
I love LA and I love Southern California for various reasons. And so, yeah, in a state of nature, where there weren't governments as they exist today, there's nowhere else I'd rather live. However, right. What you're talking about is, state government tax policy. The government of California has failed and gone to pretty extreme levels. I mean, I think we have New York State may be a competitor for the highest tax rates, but we're either number one or number two, right, in the country. And so, and what do we get for it basically in California? It's not clear to me that I'm, that either I or my fellow citizens, even including, the much poorer, less well off, it's not clear to me that they're getting something for all this money that's that's being sucked out of the citizens. So yeah, man, it's a tough place to do business relatively. It has high tax rates, and I'll be honest, I don't see it's not trending in the right direction. You know what I mean? Mm-hmm. And I think that's why people are leaving. They're saying, oh, it's easier for me to do business in, Texas or Florida, or I can go to a no income tax state like those two, or Wyoming, or Nevada or Washington. There's a few of them. I think I know all the zero tax states off the top of my head. I don't live in one, unfortunately. Not yet. Not yet. And yeah, there's also some, I don't know. I'm sure people's perspectives change on this as they age, and I'm sure mine will in future. It already has, though, which is like, I feel like there's some level of reasonableness in terms of tax rates to pay to a government, that's not, doing national defense. I mean, it's one thing to say the federal government, keeps the borders of the U.S. safe. I mean, we can debate, whether they're spending the right amount to accomplish that. I think our military budget is insane, but to the state jurisdiction, paying double-digit tax rates, percentages. I mean, it seems extraordinary. It just seems outlandish to me.
Yeah, it does. It seems, and I'm kind of like you too there. Like, I feel like there's a lot of Bitcoiners that are just total anti-tax, or there's complete freedom maximalists or whatever. And yeah, I was in that mindset at one point when I was first discovering like the libertarianism and following Ron Paul and stuff like that. I was going down that path, and I really believe that is true, but it feels like we don't live in that idealistic world where the church and the community is going to take care of the poor and the sick. So we do need some level of like safety net for people who've been dealt a shit hand. And
Yep.
I don't mind paying taxes for a certain amount, but like, yeah, when you start to see how much waste and inefficiency and just total nonsense that there is on government spending, and how many people the government employs, it just doesn't make any sense, because it goes back to Jeff Booth's argument that deflation should be happening. We should be seeing dropping in wages and prices and stuff like that, because things should be getting cheaper because technology is making things cheaper. But we have a government that's incentivized to keep the inflation going. And how do they do it? Well, they can't let everything explode. So they're just trying to keep kicking the can down the road by printing, which then they were contractually tied to like increase the wages of this massive staff that they have. And it's just like it's like, how do you solve that? Like, you can't just like let the risk flush back into the system all at once, because then we go into a global depression.
Yeah, that's right. We're stuck. We're stuck. It's interesting when I think about California, and this is like, none of this is sort of provable or quantifiable, really. It's sort of gut feel. Is California is an amazing place to live, and as a result, and there's good reasons why. I mean, it's a great, port of Long Beach. There's a lot of good reasons why LA is a huge city, right? There's just a lot of economic and lifestyle factors that are positive. The weather's amazing. There's lots of diversity. You're close to nature, right? You're near the beach. You're near mountains. I mean, it's amazing. And so with that amazing hand that, that LA was, or Southern California, or the state of California was dealt, somehow government managed to figure out a way to go on the path, get on the path to screwing it up long term and pushing people out. And, I'm grateful for the fact that there are other states that run different policies, and for the fact that people leaving California can act as a signal to the government, right? Like, hey, you're getting something wrong here. There's some part of the policy isn't working, not to say that the government is going to be able to fix itself, because, man, it's legislatures, whether at the national level or at the state level, struggle to implement the right policy. But at least there's that valve that says, oh, this is a good signal. It's a good indication that something is not right here in terms of policy. So, is it possible that California, the state of California, gets its act together? It's possible. Do I see evidence of it at the moment? Not really. So it does worry me, and it does make me question my desire to live here in the long run.
Well, how do you think, like, last year when COVID hit and the economic sort of situation really got pulled to the brink of depression, we saw governments take really strict, exaggerated moves, like printing $6 trillion as a result, bailing out all these shitty companies that should go under, but they're getting just saved from bankruptcy and from their poor business and money management practices by the government. And it's a year on, and like, we saw something pretty drastic happen then too, where the Federal Reserve started pretty much buying municipal bonds and like corporate bonds through different hedge fund exposure and stuff like that, which was never done before, right?
That's right.
A year into this, there was the zero they got rid of the reserve requirements for banks to have even any money backing the money that's on deposit.
That's right.
Like, no
infinite amount of government debt. All the treasuries that the banks want to buy, they could buy.
So that's all pretty drastic, but most people don't even talk about it anymore, because the prices of everything has gone up and the stock market's doing great and my house is worth more and I got Bitcoin. So this can't continue. What do you think the next step is for the government? Because there's going to be some kind of shock that hits the system at some point, probably this year, in the next 12 months, probably sooner, that is really going to hit the markets, like the macro markets, stock markets and everything. What do you think the next thing is that they're going to do to prevent a really bad situation?
Yeah. Oh, that's a great topic. So a couple things wrapped up in there. And by the way, first caveat, I'm extremely bullish Bitcoin, but I read an article recently on BTC Magazine, which was sort of framing up the potential scenario for a bear market in Bitcoin. And what you just mentioned could be the catalyst. In other words, let's say we go to, I don't know, pick a number, 300K a coin, right? And then there's like a shock and there's a general risk off move, right? Stock market plunges. Could that be the catalyst that, starts a bear market in Bitcoin? Yeah, that could be the catalyst. But getting to your question about what can governments do? One thing we look to for precedent is Japan, right? Japan is this window into how goofy things can get in the world of fiat money.
It's like the test net, for central bank.
It is. That's exactly what it is.
If you screw up in test net, you're okay. It doesn't affect the rest of the economy.
Japan's the Litecoin of fiat. Sorry, Litecoin investors, listeners, speculators. So the Bank of Japan has gone farther. I mean, they have outright bought stocks, actually ETFs, but the Bank of Japan now owns a significant percentage, effectively, of the overall Japanese stock market. So that's one thing that can happen, and that's just sort of the next logical, stage, or it's one of the next logical stages for what central banks could do. Another thing is, go ahead.
No, you're probably going to say it right now. Go ahead.
So I was going to say yield curve control. Which is, instead of quantitative easing, classic quantitative easing is we're going to buy X dollars or X tens of billions of dollars of bonds every month. And so you're stating the quantity of bonds you're buying, and the output of that is, the yield and where the market settles out. In yield curve control, it's inverted. You say, we're going to pin, the 10-year bond to 0%, which is what they had done in Japan, right? They did that in Japan. And in order to achieve that outcome, we will do whatever it takes. We will buy as many bonds as are required. So those are two next obvious steps. And I would argue that probably yield curve control would come sooner than outright buying of stocks by the Fed, let's say. But as far as, will they announce, there's also the question of, will they outright announce it, or will it just sort of come to be? Mm-hmm. And then the fourth thing I would say is, I do think the Fed there's no rules, right? I mean, there's rules and then they break them effectively, or they work around them. So will all this stuff happen if there's a significant market downturn? Probably, or some of it will. Now, will that save us from, 20% bear market in stocks? No, probably not. Will it save us from a 40% bear market in stocks? Yeah, probably. In other words, it takes some pain, just like we had in March, for basically to kick the machinery into gear for it to actually get moving. But anyway, that's how I see it.
Japan also, too, was the first to go into negative interest rate territory, too, I think, right? Which is
I believe nuts. That's right. That's right. On the short term. And so that's how they've kind of, I don't want to say achieved their goals, but it's the policy they implemented, at least for a while, was you keep. Nobody wants an inverted yield curve. So nobody wants the long interest rates, the 10-year to be lower or even more negative than the short-term rate. But you end up with, negative short-term rates, as you said, maybe you're at minus 0.5% or minus 1%. And then the 10 years pinned at 0. So you still have an upward sloping yield curve, slightly upward sloping.
So is the point of that to negative interest rates, is that to, I mean, to me, it sounds like it's a way to just ensure that, the risk is so high holding the fiat that if you have it at least in the bank account and you got negative interest rates, you're just basically paying protection money to the central bank to make sure you can still have the money, versus maybe it just gets taken in a bank bail-in or something if the currency collapses or something. And exactly. The other side of it is that it encourages the real whales to either pay that protection money, which destroys some money from the money supply and kind of shrinks the money supply, or to get their money out of the bank and go invest it into the economy to stimulate growth.
Yeah, it's definitely the latter. The theory is that, if there's no interest rate on your money, then you're going to go invest it and that'll goose the economy. That's clearly true. And I also totally agree. I like your use of the word protection money, because It used to be that investors would talk about the quote unquote zero bound, right? This term, the zero bound for interest rates. And the idea was you can't go under zero, because why would anybody, pay a bank to hold their money? Of course, the answer is, yeah, people will pay the bank to hold their money for a couple of reasons. One, they don't have to maintain, physical security on it. Two, it's easier to move the money in the banking system than with physical cash. And three, you still have FDIC insurance, at least, in theory. Same thing with government bonds too. It's like, people say, well, how could you ever have a government bond that yields minus 2%? That doesn't make any sense. Why would I buy that bond? Well, maybe it makes sense, because what are you going to do if you just have to hold the currency? Like, say you want to hold euros or hold dollars or some equivalent. Where are you going to hold it? You're going to hold it in a bank? Well, you only get 250 grand of FDIC protection, at least in the US. So if you're like an institutional investor, or you're a sizable individual investor, yeah, that money, at least with the Treasury, you have the full faith and credit, quote unquote, of the government up to whatever amount you own. You only have, protection in the bank up to 250 grand. And then obviously if you're holding physical cash, then you're talking about, security of managing that. And there are some cases that I'm aware of in foreign countries where it's actually illegal for the pensions, for example, to hold physical cash in a vault, right? So like if you're a German pension, I don't remember if this is the rule in Germany, but if you're a German pension and the German Bund is yielding, whatever, a 5-year bond is yielding, minus 0.5%, and you're like, no, screw that. I'm going to just, take the cash and put it in a bank vault. And nope, the government has made that illegal in some cases. So yeah, it's a weird world, but when you actually work through the logic, there are certain cases in which it makes sense, for people to hold these negative yielding bonds. Another one is just managing, duration. Some pensions have, liabilities at dates in the future, and they must match their liabilities with some portion of their asset portfolio, and so they're sort of natural buyers of Treasury debt. Anyway, I digress.
And so I guess the big narrative there about the bonds that Preston Pish has been talking about lately is that when this like $10 trillion bond market starts to dip into the negative territory, that's going to then cause a whole bunch of these institutional money people to go look for yield elsewhere because they're not getting any in bonds. Is that kind of the main thing? I haven't talked to him about that yet, but I keep hearing that, like what is it? It's called like the bond. I don't know. There's some name for it, the bond crisis or the bond explosion, or I don't know.
Yeah, no, I think Preston's spot on about. Well, he's spot on about several things, but one of the things he's spot on about is the general concept of why would I hold a fixed income investment that has some credit risk, or at least inflation risk. I mean, even if there's quote unquote no credit risk because it's the U.S. Treasury, there's never actually zero credit risk with any instrument. Government can do something stupid and default or give you a haircut. There are plenty of cases throughout history where governments have impaired bondholders. So there's that question of why would you hold fixed income that's yielding nothing and has credit risk or counterparty risk? Why wouldn't I hold something else, that I have some confidence that it's not going away and it's not going to steal from me? And the obvious things are high, what I call hard money assets. Historically that was gold, but now it's Bitcoin. And then you add on, there are certain ways to generate yield with Bitcoin, as you know, that make it look not exactly like a fixed income asset, but let's say as an investment asset that does pay a cash flow, whether it's, posting as collateral and getting a yield. And again, that has counterparty risk, but so that's its own can of worms. But then he's also talked about, the arbitrage, quasi arbitrage opportunity available in the futures market, where basically, if you hold spot Bitcoin and then you sell a futures contract at a higher price, you can capture the spread at pretty low risk. All these factors favor Bitcoin at the expense of the entire fixed income industry or market, let's say, which is enormous, right? I mean, it's $100 trillion market, let's say.
Okay, so we'll circle it back to the conversation where it started about like what are we going to see? Like how is this going to play out? Because this was a long conversation about how it could play out. So likely then it seems like what we're going to see is either one of two paths going forward from the politicians and stuff who don't want to make hard choices. Like they don't want to go to a Bitcoin standard or a gold standard or stop spending money or letting some businesses go bankrupt. They want to just keep the party going and make it someone else's responsibility. So there's two paths that they go. One is just lobbying to go straight for modern monetary theory, and that is just getting rid of the debt, like kind of just shifting. All countries do like Bretton Woods 2.0 type of thing where the countries all, representatives meet and agree that like, okay, guys, this is not all, we all know this is a joke. This debt is not actually going to get paid back. There's not even enough money in the world to pay back all this government debt. Let's stop screwing around here. Let's just say what it is. Okay. The debt's never going to get paid back. All right. Now we can move forward and we're just go with things like GDP. That's what we measure, our credit between each other in now. So in that world, then you get like debt forgiveness and all that stuff, right? So that's one world. Inflation hits us there because inflation is because they're printing money like crazy. So the other world is what we just talked about. It's they kind of kick the can down the road on making the decision to go to MMT. Like they lower the rates more. They keep printing. They don't quite go to UBI and all this stuff. They just try to steer the ship in the same direction, just like more cautiously, I guess.
Keep kicking the can, but don't bring it to a head, right?
Yeah. So in that world too, we're going to see inflation, right? Like, wouldn't we see inflation in both of those situations?
Look, this is the constant debate, right? That's ongoing in the macro world, the Bitcoin world is, will we see massive inflation, at some point? Or how long will it take until we get inflation? Or is the short-term inflation, indicative that we're going to have long-term inflation? I have been in the inflationist camp. I wrote in my book before the pandemic that I thought we'd see significant inflation, that was the solution to the debt problem. So I still feel that way. What's the timing? That's so hard to call. I personally believe that the inflation numbers we're already seeing, so like even CPI inflation, which as we know is severely manipulated, badly constructed, has lots of problems with it. Even CPI inflation is rising. And the second tell is commodities are ripping, right? I mean, industrial commodities, whether it's oil or industrial metals or, even agricultural commodities have really been on a tear. And there's a good chance that filters through in inflation. So yeah, my belief is that the 2020s, let's say, will be a significant inflationary decade. It doesn't mean it has to be hyperinflation, right? It can be 5 to 10%, effective annual inflation in consumer goods. And even that amount of inflation, if it goes on for a while, can help cut the real burden of the debt. Now, the problem, of course, is, it's very hard to manage to, high single-digit inflation and not get to 20%. That's the devil in the details there. So yeah, I'm basically an inflationist in general. I think that's the easiest way for government to get out of the debt problem. And I like the concept when it comes to government policy. I like the concept of thinking in terms of constraints. In other words, people listen to politicians and, X politician will have, Y spending plan, or A politician will want to do B item. And that's, jawbone is great. But if you really want to know what government is likely to do, figure out where they're constrained, right? Figure out where, as you just outlined, they can't stop spending, because if they stop spending, they get voted out of office. So they're not going to do that. So what's left, right? Eliminate the possible outcomes on that decision tree. And what are you left with? Process of elimination. And that's what I get to is inflation out of the debt problem.
So we're going to see probably a lot higher prices and everything, including your house value and what you're paying for gas and food. And it seems like we're going to see either that or a big crash in prices when this thing blows up because it's not manageable anymore. And I kind of would rather see the first one, to be honest. Like, I don't want to see a big crash. I mean, it sucks because it's continuing to hurt the poor and the middle class because it's making the wealth gap worse and worse and worse.
Yeah.
But I guess we just got to do a better job at teaching people about Bitcoin and showing them like this is the thing to protect yourself against what's happening right now, because we know they're not going to take the hard choice here and take that short-term pain for long-term good. It's too hard.
I'm with you, Brad. And this is my personal, ethical case for Bitcoin. One of the reasons that I spend as much time as I do on Bitcoin and on education, we talked about educating the institutions. Well, that's fine and good, but many of them are rich or representing rich people anyway. I hope to also shed light on Bitcoin just like you do for the average person, because my hope is that we have a steady and peaceful transition into Bitcoin over a period of still more years, right? Like, I'm not keen on hyper Bitcoinization in the year 2021. I'm keen on hyper Bitcoinization in the year, let's say by the year 2031, or sometime in between now and then. And I'm cautiously optimistic that is a viable outcome. I think you mentioned Jeff Booth, he would say the same, is like, this is the best path we have as Bitcoiners, is to help the world get onto this lifeboat and make the transition over a period of years based on, good education and understanding the principles, rather than just watching the price chart. And that's my hope for Bitcoin and for Bitcoiners, is that we can get people to understand this thing and accumulate over time such that it's a successful transition out of this big debt problem.
Yeah, that is a nice mission. It's good mission. Rather than start up a consulting company, that's what I did too. I just try to educate people.
Yeah,
I did try the consulting thing for a bit. It's just not me. I don't know. I just like educating people about Bitcoin.
It is. I agree. I mean, it's more fun. It's a better mission to, like, I charge whatever it costs. My book isn't free. It costs, $10, but on the other hand, it's like, in the grand scheme of things, I hope most people, can afford it. And of course the podcasts are free to listen. And I think it's just it's a better, more fun and more ethical way to try to spread Bitcoin knowledge. So plus it has the handy, of course, side effect of the more education and the more people that get involved, the number goes up. So I'm not immune to greed and self-interest, but I do believe in the ethos of Bitcoin, and I do believe that the world will be a better place, after a peaceful transition.
For sure. Yeah. I think doesn't make sense to cheer on the demise of the current economic collapse, or, well, not demise, but the acceleration, to see it happen. It's definitely not, even though it's not our fault. And a lot of like libertarians and Austrian economists and stuff have been like for 50 years saying this is not going to work, guys. Like, you got to use some math, right? This has to reconcile in the end. You can't just keep printing money. And this is what's happening. We're seeing it now. So hopefully it goes out the way that you described within, by 2030, the Bitcoin, like, Satoshis are the standard, and everybody's using it. Maybe it's like Facebook today. Like, everybody has Facebook. It's just part of our lives. But instead of taking from your life, Bitcoin gives to your life, because it allows you to, like, protect against inflation and save your money in a way that's going to hold its value better, because no one can manipulate it. Instead of, like, Facebook addicting you to, like, vapid, empty posts and selling you political ads and shit like that. So
Clickbait
Facebook in a good way.
Yeah, that's right.
So I just had thought of something too, and then we can wrap it up. We've been going for 2 hours. Appreciate the conversation, Andy.
Pleasure's mine, Brad. Yeah, I confess I have a hard stop in like 2 minutes, but it's been an awesome talk.
So Yeah, the non-consensus trade that you're right on. That's what you said earlier in the show about like how do you find a non-consensus trade that you can be right on? Obviously hindsight factors in there
Yep.
to beat the institutions, right? And we talked about how the institutions have these risk parameters and these rules and these investment committees and stuff. So I think maybe the way that anybody can beat the institutions is to just take that hodl mindset and just try to override the reallocation the reallocation rules, because then you'll hold longer than the institutions, and hopefully that'll mean the prices are higher. So they've been selling while you're holding. Hopefully that will work out that way.
Agreed. And I would add on, I think it's still early, like, are we late in the bull market or are we early in the bull market? Maybe on a percentage, I feel like maybe on a percentage, basis, we're, I don't know, halfway through. I mean, if we, maybe a little more than half, if we went from whatever, 10 to 60, so that was 6x, I still think there's a good chance that we've got a multiple ahead of us, this year. I don't know if it's another 6x, but it might be, it might be another 2 or 3. And so are we still early in this thing in the short term? Yeah, I don't think we're late in the short term. And then in the long term, are we early? I mean, absolutely. I think we're early in the long term. And so I still think the dollar cost average accumulation over time, in order to moderate your emotions and the losses that can come from trading, I think that's the right long-term strategy.
So where can people find the book, Andy? Is it just whybybitcoin.com or?
I mean, if you want to find the book, or, other podcasts or stuff I've written, check out andyedstrom.com. And the main channel for the book, obviously, is Amazon. Although I know you can get it on Apple as well. But yeah, just, either search my name, Andy Edstrom, or search Why Buy Bitcoin, and it should come up.
Awesome. Well, the topic of this conversation was why buy Bitcoin at the all-time high. And, because me and you were doing it, I guess is the reason. That's the answer. Because we're doing it. Why not? No, that's kind of cheesy advice. Why buy
Although,
Bitcoin
on the
at the
other
all-time
hand,
high? What do you think, Andy? What's the last word? Why buy Bitcoin at the all-time high?
yeah, why buy Bitcoin at the all-time high is I think it's still undervalued. And I think that there's a very good shot that this is going to become a monetary standard. And if that happens, it's still going to go a lot higher in value. So that's the investment, reason to do it. There's other reasons too. Learn how to manage private keys. Okay. I think that in a world of AI and surveillance, it's going to be a critical life skill to be able to manage private keys, to manage your data and potentially your privacy online anyway. So Bitcoin is also a forcing function for that. So that's another good reason to learn how to use Bitcoin, is because it will teach you a skill that will be useful and critical potentially in the future as the internet eats the world.
Awesome. Thanks, Andy. Appreciate the chat.
Pleasure's mine, Brad. Thanks for having me.
Bye-bye.